Hello and welcome to this video. Based on the request of a subscriber, we are going to do a AS level question from paper 2 variant 22 May June 2020 question 1 based on incomplete records. The question states that Tariq owns a retail business but does not maintain full accounting records. All goods are purchased on credit but all sales are on cash basis. Tariq provides the following information for the year ended 30th September 2019. Trade payables 1st October 2018 is $4,980. 30th September 2019 is $7,220. Payment to trade payables is $70,300. Discount received is $940. In the A bit of the question, we are asked to calculate the credit purchases for the year ended 30th September 2019. So now let's calculate the credit purchases. For credit purchases, we will make the trade payable account. As I have mentioned in my previous videos, we are going to make most of the ledger accounts as well as the journal entries on the basis of the modified accounting equation which we did in the previous video, as assets plus expense plus drawing is equals to capital plus income plus liability. On the left hand side of the equation, we have assets, expense and drawing. So for these accounts, the opening balances will be debited, increase will be debited and decrease will be credited. Whatever is there on the right hand side of the equation, that is capital, income and liabilities, will have the opening balance on the credit side, and trade payables are our liabilities. So for this, we will have the opening balance on the credit side. The balance which is given here on 1st October 2018 is our opening balance, and hence this should be credited. Opening balance 4,980 is credited, and then as we have the opening balance on the credit side, the closing balance will be on the debit side. So on 30th September 2019, the amount which is given as 7,220, which is our closing balance, will be debited here as closing balance $7,220. And then the payments to trade payable. Trade payable is a liability, and when you are paying the liability, naturally the liability will reduce or decrease. So decrease in liability should be debited, hence the payments are debited here as $70,300. And then next we have discount received. This is the discount which the suppliers have given us because we have paid on time, and this reduces your liability. So whenever there is a decrease in the liability of trade payable, it should be debited. Hence we have debited discount received as $940. After this, we total the debit side, that is, we add $70,300 plus $940 plus $7,220, will get the total as $78,460. From this, we subtract the opening balance of $4,980. We get the balancing figure as $73,480, which will be our credit purchases, which we are asked to calculate in the question, and we total up both the sides, thereby completing the trade payable account. Furthermore, additional information is provided. Assets and other liabilities on 30th September 2019 and on 1st October 2018 are as follows. Furnitures and equipments at valuation $28,300 and $26,800. Inventory $8,080 and $7,014. Other receivable, rent prepaid, we don't have any value on 30th September 2019. However, on 1st October 2018, it was $990. Cash at bank $1,960 and $3,360. Cash in hand $14 and $820. Bank loan $15,000 and $12,000. Other payables, rent accrued on 30th September 2019 was $1,040, and we don't have any value for 1st October 2018. Next, we have summary for information taken from the bank statement. Receipts, cash taking bank $112,400, additional bank loan $3,000, payments, trade payable $70,300, rent of premises $14,930, new furniture $5,200, accountant's fees $640, loan interest $580, drawings $25,150. Tariq took goods for personal use valued at cost $390 during the year. In the B bit of the question, we are asked to calculate the depreciation of furniture and equipments for the year ended 30th September 2019. You see, in incomplete records, we calculate the depreciation based on the revaluation method. And based on this method, what we do is we take the opening valuation of the non-current assets. To this, we add the purchases of any non-current assets during the financial year, and we subtract the sales of any non-current assets during the financial year, and we also subtract the closing valuation of the non-current assets. We will get the value of depreciation. So here the opening valuation which is given is $26,800. To this we will add the new furniture which was purchased by bank, and the value was $5,200. So we will get the total as $32,000. From there we have to subtract the sales of furnitures and equipments. As we don't have any sales here, so we are not going to do that. Then we have to subtract the closing valuation which is given as $28,300. So the difference between $32,000 and $28,300 is $3,700, which will be the value for our depreciation. Furthermore, additional information is provided which states that Tariq took some cash from cash box as drawing during the year. However, no record was made of the amount withdrawn. The following information is also available about cash. Cash sales $133,200 and wages of assistant as $18,800. In the C bit of the question, we are asked to calculate Tariq's cash drawings for the year ended 30th September 2019. So in incomplete records, to find the cash drawings, we make the cash account, and cash account is an assets account. So the opening balance should be debited. So the opening balance, which is the cash balance on 1st October 2018, which was given in the information, is debited here as opening balance $820. Then cash sales increases the cash balance in the business, and any increase should be debited. Hence cash sales are debited here as $133,200. And after this, whatever is paid from the cash box will reduce the cash balance, and any decrease in assets should be credited. So in the receipts and the payment account, it was mentioned that the cash was banked, that is, cash was taken out from the business and have been deposited in the bank account. So this will reduce the cash balance, and as it decreases the asset, it should be credited. Cash banked is credited here as $112,400. Wages which are paid to the assistant from the cash is also the cost which reduces the cash balance in the business. So as it decreases the cash balance, it should be credited. Wages of assistant $18,800 have been credited. Then the drawings, which is the amount which the owner has withdrawn from the business, will also reduce the cash balance. But for now we don't know the value, so we'll just write drawings and balancing figure and leave it for now. Then we will write the closing balance. As the opening balance is on the debit side, the closing balance will be on the credit side. This is the cash balance which was mentioned in the information on 30th September 2019 as $410. After this, we will total the debit side, that is, we'll take $133,200. To this we add $20, will get the total as $134,020. After that, we will subtract cash bank, wages and the closing balance from $134,020. We will get the value as $2,410, and this will be the cash drawings, and this will be the balancing figure. After this, we total up both the sides, and thus we have calculated the cash drawings. In the D bit of the question, we are asked to prepare the income statement for the year ended 30th September 2019. Before making the income statement, let's do the calculation for rent, and then we will proceed and make the income statement. You see, it was mentioned in the receipts and payment account that rent paid by bank was $14,930. Furthermore, it was given in the information that on 1st October 2018, there was an opening balance of rent which was prepared in the last financial year, and this was for the rent which was required to be paid in the current financial year for which we are making the income statement. As this is the rent for the current financial year, we are going to add it as $990. Furthermore, it was also mentioned that at the end of the year, that is on 30th September 2019, there was rent which was accrued. That is, this was the outstanding rent which was required to be paid during the current financial year, as this is the rent expense for the current financial year, and as this is an expense for our current financial year, this has to be added. So we are going to add $1,040. So for us the total rent will be $14,930 plus $990 plus $1,040, and hence the total will be $16,960 for rent. Now let's proceed and make the income statement for the year ended 30th September 2019. We will start with the sales revenue, which was given in the additional information which was mentioned before the bit C of the question as sales revenue, and the value was $133,200. And from there we will subtract the cost of sales. In cost of sales we have the opening inventory, which was given as $7,410. To this we add the purchases, which was calculated in the bit A of the question as $73,480. Once we add this, we get the total as $80,890. From there we'll subtract the goods taken for the personal use, as these are the drawings and not a part of the cost of sales. Hence we subtract $390, will get the value as $80,500. From there we subtract the closing inventory of $8,080, will get the cost of sale as $72,420. So this cost of sales will be subtracted from the revenue. We get the gross profit as $60,780. To this we will add the discount received, which was given in the information before bit A of the question, and as this is the income or the gain for the business, this is added as $940. We'll get the total as $61,720. From there we have to subtract all the overhead expenses, starting from rent, which was calculated as $16,960. Then the depreciation of furnitures and equipments, which was calculated in the bit B of the question as $3,700. Accountant's fees, which was given as $640. The loan interest, which was given as $580. The wages of assistant, which was given as $18,800. So when we add all this overhead expenses, we'll get the total as $40,680, which will be subtracted from $61,720, and will get the profit for the year as $21,040. Before proceeding further, let's understand incomplete records in a nutshell. There are various steps which we take when we come across an incomplete record question. Of course, this should be based on the requirements which is mentioned in the question. The first step which we take is we prepare the statement of financial affairs. This is to calculate the opening capital. As the question which we have done has not required or have not mentioned us to calculate the opening capital, we have not taken this step. Then the second step which we take is we make the summarized bank account or the receipts and the payment account, and this is to find the missing figures like taking banks. These are your sales takings which have been banked, or the payments to the creditors, or the drawings. If it is missing in the question and we are asked to calculate, then we do this. However, in this question which we have done, they have already made the receipts and payment account, so we have not taken this step as well. Then in the third step, what we do is we make the summarized cash account to calculate the missing figures like cash sales, cash purchases, or cash drawings. And in this question, we were required to find the cash drawings. So we have made the summarized cash account. Then step 4, we prepare the control accounts for trade receivable and trade payable, and based on this we can find the credit purchases or credit sales. With trade receivable we find the credit sales, with trade payable we find the credit purchases. In this question we have made the account for trade payable, and as all the purchases were on credit, so the total purchases which we found was the credit purchases, and this was also one of the steps which we have done in this question. Then in step 5, what we do is we make the adjustments for accruals and prepayments for the expenses and the incomes, like the rent. We have done the calculation for the prepayments and accruals for rent. Sometimes it may be for insurance, for commission, or for various incomes and expenses account. So that will be our 5th step. And in the 6th step, what we do is we calculate the provision for doubtful debts if it is required, or we calculate the depreciation, and mostly in incomplete records we calculate the depreciation based on the revaluation method, and if something else is mentioned, for that also we do the calculation before proceeding for making the financial statements. And in the seventh step, which will be our last step, where we will prepare the financial statements, and this should be again what have been mentioned in the question. In this question, we were required to make just the income statement, so we made the income statement from the information which we have gained from the various steps above. So this is how we deal with the incomplete record question whenever we come across such questions in our exams or when we are practicing the questions. In the E-bit of the question, we are asked to explain the accounting concept. The first one is business entity concept. Business entity concept states that the business and the owner have separate existence. Hence, what we do is we record only the transactions which are related to business in our books of account, and we do not record any transactions which are related to the owner's expenditure in our book of account. However, if business pays some of the expenses of the owner, then this is recorded as drawing in our book of account. So business entity concept separates the business and the owner as two different entities. Substance over form. Substance over form states that the financial statement must give a complete and an accurate picture of an event. Therefore, we give more importance to the economic aspect or the economic impact of a transaction compared to the legal impact or legal form of a transaction. For example, we have purchased a robotic car for our business requirement on a hire purchase basis. So when we purchase something on hire purchase basis, till the time all the installments are paid, legally this asset do not belong to our business. However, we consider this as our business asset, as this have economic impact on our business, and we don't give more emphasis to the legal form because legally this belongs to the seller. We record this as the business asset, hence we give more importance to the substance than the legal form of a transaction. So this is recorded as our business asset, and the installments which have to be paid are recorded as liabilities based on the concept of substance over form. Furthermore, additional information is provided which says that Tariq have become concerned about his business liquidity. He is considering two options. Option 1, reduce the inventory level. Option 2, delay the payment to the suppliers. In that bit of the question, we are asked to advise Tariq which of these options he should take and justify our answer. You see, you have to advise and one course of action, and for this you will fetch marks. That is, it should be either reducing inventory or delayed payment based on your analysis. I have mentioned both the options with pros and cons, and you can justify your answer based on this pros and cons. Here we have first option, which is to reduce inventory. When he reduces inventory, naturally the money will not be tied up in the form of raw materials, so he will have more cash available, so thus it will improve the liquidity in the business. Then this will also reduce the storage cost, as we are not having more inventory with us, so naturally there will be no requirement for more storage, and as there is no requirement for more storage, this will cut down the storage cost, and as the cost is reduced, naturally there will be more cash available in the business. Furthermore, this will reduce the chances that the items may get obsolete or outdated or wasted, and hence as the cost is reduced, there will be more cash in the business. However, the negative impact of this course of action is that there may be no buffer inventory available in the business, and if the demand of the product increases, then they may face a problem because they may not be able to satisfy all the demand which exists in the market, and because of this the customers may have a negative publicity about the product, and this may have a bad impact on the business. So the next option which we have is the delayed payment to the supplier. If the amount which is paid to the supplier is delayed, and as it is not paid, so you will have more cash in the business, and this will improve the liquidity of the business. However, this might cause the loss of cash discount. If we remember, in the question it was given that they are receiving a discount of $940, so he will lose this discount if he delay the payment to the supplier. And furthermore, it will have the negative impact on the credit terms, and because of this he may lose his suppliers. And sometimes suppliers also charge interest on the credit period for which they have supplied the raw material, and this will also be an extra expense for the business. What I suggest based on my analysis of the question is they should go for the delayed payment to the supplier. Why? Because here the closing inventory is just $8,080, and this is a very small amount of closing inventory which they have. And if they reduce this, there will be no buffer available in the business. And if there is no buffer inventory or buffer uh, products available in the business may not be able to fulfill the demand if it increases, and sometimes even the existing demand may not be able to fulfill. And apart from that, when we go for the credit purchases, as all the purchases are on the credit terms, so the amount is quite huge, which is $73,480. So this may help him to overcome the liquidity crisis in a much better way when compared to cutting down the closing inventory. No doubt he may lose this cash discount of $940. However, the profit is also good, that is, it is $21,040. Even if 940 is reduced, still he is making profit. So, based on my analysis of the question, the delayed payment to the supplier is a better option. And for short term sources of finance, they can also go for debt factoring. However, here all the sales are on the cash basis, so we don't have any trade receivables, so we can't go for the option of debt factoring. So based on my analysis, this is what I suggest. You have to answer based on what you think is right. You have to give an advice, because that will fetch you mark, and then you have to support your answer. So with this, we have completed this question. Thanks for watching my videos and have a great life.